Hello, everybody, and welcome back to the channel. It's me, Rob Marsiglio, sales representative with Keller Williams, referred urban, out here in Durham region, helping the great people of this area and doing my best to bring you weekly content, keeping you up to date on all things Greater Toronto Area real estate. The focus of this week's video is going to be mortgage renewals, potential mortgage renewal crisis. Desjardins came out, a strategist, and said, Bank of Canada is going to have to cut rates to avoid this. We're going to hop into that article, as well as a few different scenarios for people who have purchased homes in the last few years, what payments could look like on renewal. Kind of the reason I think that these strategists from Desjardins came out and made these statements. Right into the article, Bank of Canada will cut rates over mortgage renewals, by John Ehrlichman. This is in BNN Bloomberg. So risks related to looming mortgage renewals mean the Bank of Canada is done hiking interest rates, according to a prominent strategist who predicts rate cuts to come halfway through next year. The bank is done raising rates. Royce Mendez, head of macro strategy at Desjardins, said, "In Canada, we have to expect that the next move is going to be a cut." Before we go any further, I want to step right in here. I can feel the hate coming through already. A realtor talking about rate cuts. That's not what's happening here. Just reporting what is being said in this article and hopping through, like I said, the scenarios as to what would happen if rates stay at these levels on renewals for people who have bought over the last few years. Back into the article. Mendez sees that happening as soon as the second quarter of next year. He's anticipating a sharp reversal on the horizon to avoid a worst-case scenario for the economy brought on by the looming threats tied to Canada's mortgage markets. We're not going back to zero, but I could see rates falling to about 2.5% in terms of Bank of Canada's policy rate. Mendez added, "The wave of mortgage renewals that is coming means the bank has to get rates lower." The article goes on to say that testifying in Ottawa this week, Bank of Canada Governor Tiff Macklem cited mortgage renewals as one of the reasons the central bank held the line at its most recent interest rate decision. And out of RBC, Darko Mihalik made his own headlines this week, noting in a report that 60% of Canadian mortgages are up for renewal in the next 3 years. Homeowners are facing a payment shock unless rates do come down. So Mendez, by comparison, believes that percentage could be even higher. In 2020 and 2021, the housing market in Canada was booming, so there were a lot of mortgages taken out, and the real pain begins the middle of 2025 into 2026. It's really that last section, pain beginning 2025, 2026, that led me to create this video, put together some numbers for you to look at. Going to be based on Durham region detached home prices, but we can do this exercise for anywhere really across Canada. But let me run you through the scenario that we are working with. So our payment shock scenario is going to be based on average Durham region detached home prices. We're going to use RateHub's discounted 5-year fixed rate at the time of purchase. We're going to assume that the person put 20% down and had this discounted 5-year fixed rate as posted by RateHub as of January of those years. Then we're going to re-extend amortizations on renewal. So if people start with a 25-year amortization on their mortgage, we're going to assume that they're able to re-extend back to 25 on renewal. And the renewal we have done at 3 different rate levels. Now, have I chosen those rate levels? I've kind of chosen, where posted rates are today, which is about 5.94%. I know people have been able to get 5.54 is kind of the lowest 5-year fixed rate that I'm hearing right now. And then we're going to move the bar up 40 basis points to 6.34 as well. So it's 5.94 plus or minus 0.4% are the 3 scenarios we're going to walk through for buyers that have purchased homes, like I said, from 2019 to 2022. Let's get right into these numbers. So here's our 2019 buyer, and I think the 2019 buyer shows us why we're not so worried about maybe 2024, at least early 2024 renewals. We're basing this on a purchase price of $642.36. You can see our monthly payments at 3.19%, that discounted rate, were just under $2,500 a month. If they were to renew at 5.54%, right now, our remaining mortgage balance would be $440,000 roughly. So payments go up to $2,700. That's a change of $219 or plus 8.8%. And you can see how this incrementally gets more and more expensive, obviously, as the rates go up. But anyways, you're looking at a difference of $219 per month to $428 per month. I feel like, and maybe this is a bit of a privileged statement to make, but $219 to $430 for somebody who's in a position to buy a detached home per month isn't going to be that big of a game changer, which is why I feel like mortgage renewals in 2024 early, I don't feel like we're going to see that stress on those 5-year terms until a little bit later. And on top of the actual change, I've thrown percent changes in here, as well as how your principal and interest paid at the end of the terms will differ and just how much you're going to be paying in total based on these different rates. So again, you're going to be paying less principal over the next 5 years renewing in 2024 paying more interest and more total costs altogether. But on a monthly basis, I feel like these are manageable increases to people's mortgages. When we get into the 2020 buyer pool, this is again in Durham region we're basing this on. So the average sold price of a detached property in Durham went up to $724,000. So you need roughly $580,000 mortgage. That's what your payment would have looked like, and the total that you would have paid in principal and interest at the bottom. So running the scenario at these same rates, 5.54, 94, and 34, you can see that your payments per month will go up anywhere between $411 to $644. A little more stress than we saw for that 2019 buyer. Hopefully this is a little more manageable than what we're going to see for 2021 and 2022 buyers. And I think this is why in the article, Mr. Mendez referred to the real pain coming in 2025, 2026, because you can start to see that these jumps, they really do get significant, right? So we're buying a detached home in January of 2021 for $985,000 on average in Durham region. Our monthly payment at rates then, which were 1.39%, or just over $3,100 per month. Assuming that rates hold where they're at, again, best case scenario 5.54, worst case 6.34, you're looking at an increase of anywhere between $880 to about $1,200 per month. That's a big chunk of change. That is kind of daycare payments for a single month. It's a big chunk out of the budget that you're talking about. I don't know how you are going to look at your budget and cut that much out per month should rates stay this high on renewal. As a percentage, these are the highest percentage jumps you'll see based on, the original mortgage rate that you got that 5-year fixed rate at and what you're renewing at. You're looking anywhere between just 28% to 38% that you're looking at in terms of increases on a monthly basis in mortgage payments. When it comes to the highest absolute jumps, that's going to be the 2022 buyers who kind of locked in at that 2.34%. This will be renewing in 2027, let's say. Again, if rates stay this high, you're looking at payment changes. It's about the same that you're going to see as a 2021 buyer, but on the high end, if rates go higher, you're going to see the biggest jump in absolute prices. The percentages are actually pretty comparable to what your 2020 buyer is going to be seeing. That's 16 to 25%, and here we're seeing 17 to 27% increase in those monthly payments. But again, these are not numbers that are small, right? It's $800 to just over $1,200 per month that you are going to need to make up. So again, this isn't a video to tell you that rate cuts are right around the corner, that the Bank of Canada is going to come in and save homeowners. It is a video to highlight, should rates stay at these current levels going forward, this is what renewals are going to look like. Better to start planning now than closer to renewal when it's much too late to do anything. If you are coming up for renewal in the next little bit and want to be put in touch with a mortgage person who can help you out, please feel free to reach out. All my contact info is down below. I'm not a mortgage person, but I have contacts obviously who are, and I'd be happy to put you in touch to kind of strategize with them what a plan looks like going forward to make you kind of feel the impact of this renewal as little as possible and to really strategize and plan that out. Thanks so much for sticking with me right through another video. Until we speak again next time, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.